Income from other sources, Part 2. Income Tax Act 1961. Lesson 10. Income from other sources, Part 2. Good morning, everybody. I am Mr. T.B.Agarwal speaking from Agarwal Income Tax Tuition classes, Akola. This is Part 2 of the video 9, in which we will study the items of general incomes and specific incomes to be assessed or brought to tax under the head Income from Other Sources as per the provisions of Section 56 of the IT Act 1961. The specific incomes which are always taxable under the head Income from Other Sources as per the subsection 2 of Section 56 are 1. Dividend income, Section 56(2)(1). If it is not exempt under Section 1034, that is dividend income from domestic Indian company, which is exempt up to rupees 10 lakhs. 2. Winning from lotteries, crossword puzzles, races including horse races, card games and other games, or gambling and betting of any kind or nature, Section 56(2)(IB). This income is taxable at flat rate of 30% and tax is to be deducted at the time of payment itself. This is called, that is the tax deducted at source is called TDS. Therefore, the student should see in the paper as to whether net receipts are given or gross receipts are given in the example. If net receipts are given, then we have to calculate the gross receipt amount of the receipts from these sources by adding 30% amount of TDS deducted and make it a gross receipt. The net amount given is 70% because 30% tax has been deducted at source, and we have to take gross amount in consideration for the purpose of computing total income from this item. Suppose the amount of rupees 1 lakh is given as winning from lottery as gross amount, then we have to take that amount as total receipt. But if the net amount of receipt is given at 70,000 rupees, then we have to calculate the gross amount. That is, if 70% is 70,000 is 70%, then what will be the 100% amount of the receipts? That is 70,000 divided by 70 into 100, that is 1 lakh rupees. Thus, the gross receipt would be 1 lakh. 30% of 1 lakh, 30,000 rupees is TDS. This will be have to be added to the net receipt shown in the question paper. If, however, only receipts are given, then the students should make it clear that the amount is treated as gross or net amount and taken into consideration. Generally, net amount is given. 3. Employers' contribution towards staff welfare scheme, Section 56(2)(IC). 4. Interest on securities, Section 56(2)(ID). Interest on 7% government securities, Agra municipal bonds, Bihar government loan bonds, UP government loan bonds, Mumbai Port Trust securities of foreign government, 7% gold bonds, etc. are taxable under this head of income. However, interest on securities does not accrue according to the period of holding or daily. It becomes due on date specified on the securities. Interest will be taxable for that period of 6 months of holding in the year, say 1st March or 1st September, if given on the securities. 5. Rental income of machinery, plant or furniture, etc. Section 56(2). This income is subject to allowance of repairs, insurance premium and depreciation, etc. if given in the paper according to Section 56, small section 2. 6. Rental income of machinery, plant or furniture, etc. with letting out of building which is not separable from each other, Section 56(2)(3). The provisions of Section 57(2) applicable as in case above. 7. Key man insurance policy commission or sum, Section 56(2)(4). 8. Gifts above 50,000 rupees in the nature of money or immovable property received without consideration, subject to certain exceptions about gifts from relatives and on special occasions, etc. Section 56 to 7 or and 56 to 10. The gifts in other kinds such as jewelry, paintings, sculptures, etc., market value of which exceeds 50,000 rupees received without consideration are also taxable under this head of income. 9. Interest amount received on compensation or enhanced compensation. Section 56 to 8. However, 50% deduction is allowable under Section 57(4) from this receipt. 10. Advance money received in negotiations for transfer of a capital asset. Section 56 to 9 and 10. 11. Compensation on termination of employment or on modification of terms of employment, etc. Section 56 to 11. The incomes or receipts mentioned above are specifically taxable under the provisions of subsection 2 of Section 56, that is under Section 56(2) of the Income Tax Act 1961. We have discussed the specific items of income and receipts which are taxable under the provisions of Section 56(2) along with expenses or deductions allowable from such incomes. From these specific incomes, expenses to earn the same are allowable under Section 57 of the Act, such as commission for or remuneration paid to a banker or any person for collection of dividend, interest on securities, etc. In case of letting out of machinery or plant or furniture, etc., or given on hire, the amount spent on current repairs of the assets or insurance premium for risk of damages and destructions of the premises, machinery or plant or furniture, etc., and depreciation as per the provisions of section of the Act, that is Section 32 of the Act, are allowable from this income. No other deductions or expenses except the above are to be allowed from such income or receipts mentioned above. Further, the allowance or expenses in connection with the activity of owning and maintaining race horses are deductible under the provisions of proviso to Section 58(4). Though the Section 58 prohibits the amounts to be allowed from such income or receipts. Any personal expenses of the assessee, expenditure of capital nature, any amount of interest or salary payable outside India on which tax has not been deducted or paid are not allowable in computing the income under this head. Likewise, no deduction for any expenditure or allowance is to be made in computing income by way of winning from lotteries, crossword puzzle, card games and other games, races including horse races, or from gambling or betting of any form or nature whatsoever. The student should study these 11 items of specific nature carefully, questions on which are likely to be asked in the question paper so that they can obtain good number of marks, and the study will also be helpful to them in their advanced study of Income Tax Act. Besides this, any income which is not covered under the four heads of income and subsection 2 of Section 56 discussed above is taxable under subsection 1 of Section 56. There are a number of such items covered under Section 56(1). However, some of them can be listed as below for the sake of study and understanding from the point of view of examination. The list of such items and incomes, receipts, along with deductions therefrom will be discussed in the lesson part 3 of income from other sources in next video. If you like this video, then please press the thumbs up icon and subscribe the channel, which is free of cost, and press the bell icon next to it for getting the notification of my next video. Thanks.